Okay, Okan, welcome back. Great to have you here, buddy.
Yeah, great to have you too.
What do you make out of this number, Okan?
Well, the first thing I make out of it is that the Fed is going to cut the rates, and it is not going to be 50 basis points. It's going to be 25 basis points. Not as expected as people
Okay,
expecting. Some
right,
people are expecting 50 basis points. So I
right.
think it is time to start cutting the rates by 25.
Okay,
That's why.
so will risk be disappointed by that?
Uh, in terms of the stock markets, I think
Yeah,
the stock markets have that's a good uh, case for
good
the stock
question.
markets. No, no, that's a good case for the stock markets. I think the stock markets will get some support from that, just because
Okay,
the Fed is not going to cut the rates by 50 basis points, but
yeah, they're
25
not
basis points.
panicking. In other words, they're not
Exactly.
panicking.
Right.
Okay, all right. So tell us what's on your mind. And
Okay.
you made some great calls. You were bearish a dollar the last time we talked, and you were
Yeah.
bullish silver. Both of them worked. Um, status quo is this the beginning of an emerging bear market in the dollar that has legs and staying power?
Yes. Uh, can I share my screen?
Yeah, sure. Blake, if you don't mind um, unsharing, there you go.
Sorry about that.
That's okay.
It's all right. Well, I have some slides for you today.
Oh, wow, a presentation. Okay.
Yeah, exactly. And I'm going to start with, if I may, with the Fed funds raise. And when, the last time we spoke, Dale, I mentioned to you that about months ago, early or late February, I mentioned that the Fed is going to start cutting the rates starting from September, which many people thought that it's too late, but it wasn't too late because I was looking at this forecaster, which I built myself using the Bloomberg platform. What I have here is if you recognize this blue line here and compare it with the white line, which is the Fed fund rate, and the blue line is my forecaster about when the Fed is going to start cutting the rates or start raising the rates. If you look at this blue line here, for example, in early 2006, this blue line started falling, but the Fed started cutting the rates a year later, about 1 year lag, right?
Okay.
So uh, it was it was around late 2023 when this blue line started falling, as you see on the screen. And
Okay.
after about a year time, it is a good time for the Fed to start cutting the rates. Like, so the history is going to repeat itself like it has happened in 2006. So this suggests that, well, it already suggested to me a long time ago, but this suggests that this 18th of September, the Fed is going to cut by 25 basis points, which I think that it's a good news for the stock markets. However, I think that now I'm switching to the next slide.
Yeah,
I
got
think
it.
that the stock markets are going to have some headwinds because of other reasons, and which is the differential between the central bank's policies. For example, uh, if you look at this European Central Bank, they already have started cutting the rates while the Fed remained at 5.5%, right?
Yeah.
So this is kind of a differential in the monetary politics. And we have seen this, what we have seen the result of this, especially on the Deutsche Bank's currency volatility index. If you look at this chart, where you'll see the orange line showing you the volatility index for the currencies. Okay. Uh, for example, from July till August, this volatility in the currency market has risen, and it is associated with the S&P falling. So this many times this happened. This is the case which is happening. You see here, for example, March 2024, this volatility index has risen, and the S&P, you see, has dived, and the volatility index fell, the S&P started rising, you see?
Yeah.
So these are working against each other. Now, looking starting from August
Yeah.
and until today, we see there is an increase in this volatility. Why is that? It is because we're still going to have differential of monetary policies between different central banks.
What do you
And
think ECB will do next week? They're meeting next week. They're going to cut
uh,
again?
yeah, they're going to start cutting again, but again, we're going to get news about Fed being whether it's going to be reluctant or not. So people are still not going to be very certain about what the Fed is going to do, because as you can see today, the data is not really bad. You know,
No.
it's good
Right.
number.
Yeah.
Uh, Simply because the unemployment rate is still full. You see, the unemployment fell to 4.2%. Well, just the non-farm payrolls just missed the estimate. That's only about 20,000 people, which is nothing. All right. So I think that going forward, we're still going to see some. I think this index, volatility index in the currency markets is going to increase, which suggests that we might see some pressure on the S&P going forward. So that's what I think about the S&P.
So
And
what do you give more weight to? That a quarter point is good for the stock market, or your volatility index that's saying it could get weaker?
uh,
Because they're
well,
opposite narratives.
right, exactly. I think
So
okay,
it maybe
20.
it's, I don't know, it might be the right answer, right?
Well, of course, I don't know, but I think that the Fed is going to start cutting the rates by 25 basis points, which will be perceived positively from the market. But
Okay.
the market will continue to watch this volatility index of the currencies. If the volatility index continues to increase, then some investors may be reluctant to buy stocks. But if the volatility index falls in the next few weeks to come, when the
Fed
Fed
meets.
cuts the rates by 25, it's good news, definitely good news.
Okay.
So we have about 2 weeks to go from now. So until 2 weeks time, we have to watch these two. We have to watch this volatility index and and
Okay. Are you still there, buddy? Hello? Okan. Can you guys hear me out there? Laura?
different markers
Okay. Lost you
to
for a while.
forecast. Yeah. Okay. Are you with me?
Now, yeah, but I don't know what you were
Okay.
saying the last couple minutes, but go ahead.
Oh, okay. Okay. Basically, what I was saying to you that going forward, we should be watching this
Okay.
currency volatility index.
Yeah.
If the volatility index falls, definitely, I think that this S&P 500 is going to find some support. But but I think that there are some good reasons for why this volatility index to stay around this elevated uh, levels. So, which suggests to me that S&P 500 may be sold off in the coming few weeks to go.
Okay. Got it now. Got
Now,
it.
what I want
So
to
short
do,
term negative, long term bullish.
yeah, definitely,
Okay.
exactly,
Okay.
got me right. Now, what I want to do is I still want to continue to talk about S&P, but I want to relate it to the crude oil. So let me talk about crude oil just a little bit. So I am doing some relative pricing, if you will. Okay, now I am looking at the crude oil. And from crude oil, I will relate it to how S&P might be influenced from that and how the dollar may be influenced from it. Now, looking at the crude oil, I am watching the hedge pressure of the crude oil in the pane below. You see here,
Yeah.
the blue line is showing you the hedge pressure, and the red line is showing you the speculative net positions. Hedge pressure, let me explain just very quickly. Hedge pressure is when if the producers feel that the price of the commodity that they produce will fall, they start short selling the futures contracts. Okay, so hedging pressure going up means that the producers are selling. Okay, so it works just a little opposite. So, so here you see the blue line has been going down, which means that the producers have been selling less. So that's what it means. While the long speculative positions, net long positions, have also been going down. So what this tells me that the interest in the crude oil market has fallen. So the market is out of so the market is staying in cash and not having any exposure against the crude oil. So this suggests that in the next few weeks, the crude oil is going to maintain low levels, but it's not going to go higher and it's not going to go lower. Okay, so that's what this is telling me. For example, if you look here, 2022 between October and December, do you realize that that when the hedge pressure rises and speculative net positions fall, this is associated with the selling pressure of the crude oil. Crude oil. Why? Because hedgers are selling more and the speculators are buying less. So, but here they are working both together. So, both of them are falling. So this tells us that the interest in the crude oil is falling. So I think that we're not going to see much of a movement going forward. So this is also good news for the
So this
S&P.
is not a technical breakdown that we had. So,
No,
no?
no, it's not a technical breakdown, but because if it were a technical breakdown, you will see a significant increase in the volume, but
Hedging.
the volume hasn't changed too much, and the open interest is still high.
Okay.
So,
All right.
when you
Good.
compare it to the December levels or June levels, March levels, it's still high. So it's not really a break. Uh, uh,
So it's a really do nothing market right now.
exactly. Yeah.
Okay. Got it.
And let me switch to my next slide, which is about what's going to happen to the euro dollar. Well, I look at the euro dollar from a different perspective in that uh, if you look at this red line, this is the differential of the financial conditions in this indices between the Eurozone and the US. So as you can see, the lately in the late years from 2022 until this time, the financial conditions index has been rising in favor of the euro. And this is also very well working with the euro dollar. As you can see, the euro dollar is rising, and as the financial conditions index differential is rising. Again, let me repeat this: financial conditions index differential is calculated by Euro's financial conditions index minus the US financial conditions index. Okay. So what I see from here is that there is still just a little way out for this red line to go, which means what? Well, why is it going to continue rising, but slowly? It's going to continue rising because the next week, 2 weeks later, the Fed is going to start cutting the rates. So I think that this higher levels in this red line is going to maintain. So this it's not going to fall. Going to continue to rise. So if
Yeah.
it's going to continue to rise, so well, this is a good sign that the euro dollar may find some support from 111 area. Okay, from 111 handles will be some uh, key levels because it has already broken, but it is going to uh, make a base around here, and then it will start to continue up to 115 area in the next 2 or 3 months. And this is supported by the fact that this blue line, which is
Could we
the
pull back
next,
to 110, 110.50, 110 even before that happens?
well, it is a good probability that it might happen because the volatility is high. So I can tell you that there's absolutely about 50, 70% chance that it might hit to 110.50, maybe
Yeah.
110, just below 110
Yeah,
or
that's what
50,
I'm
maybe.
looking for. So you see that as a possibility
Yeah, well,
or
because it's going to have
to
to
buy.
test.
Yeah,
Yeah,
got it.
yeah, exactly. And
Okay.
and for example, the smart money, look at the smart money, what it is doing. The blue line is showing you what the funds are doing. The funds have been buying the euro dollar starting from the middle of 2024. You see this rise here? So
Yeah.
the funds are buying. So the funds are not buying it to sell uh, from just by making 500 basis points. They want to
Yeah.
wait for about 10 basis points,
Yeah, they're
1,000
looking
basis
for
points.
that. They're looking for the 120 target.
Well, yeah,
They're buying
exactly.
it for
But
120.
yeah, but
Right.
so I think in the next few months we will see 115,
Yeah.
and then we'll get back to 110 again, and then from there we will go up to 120.
Okay, that kind of fits that this next wave up is 5 to complete the whole first wave in euro. And then you get a wave 2 pullback. And then the big money wave happens, 3, right? We're completing the first wave up, maybe at 115, like you're saying.
Yeah,
And then,
the
yeah,
okay, you hear me?
yeah, I hear you.
Okay, great. Yeah, the 115 is the first wave, and
Yeah,
the end target is going to be 120. That's going to be the
yeah.
second one.
Okay. Great presentation again, Okan.
Thank you.
How things going for you in your home in your country? How things in Turkey for you?
Well,
Huh?
from the time we spoke until today, it hasn't gotten better,
Yeah.
unfortunately. Uh,
Uh, okay. So how's the Turkish lira acting? Should we buy it?
uh, no, we should actually sell it because Turkish has been strong when you compare it with the inflation differential between the US and Turkey.
Yeah.
So, and many exporters are complaining about why Turkish lira is so strong, and it is also so strong that it's not letting the stock markets go higher
Okay.
because relatively Turkish stocks are being more expensive because the Turkish lira is too strong. So, when S&P index was rising and then in the last 2 weeks, Turkish stock index has been going to the south direction drastically. So that's why the reason why this is happening is mostly because of the Turkish lira is too strong these days.
You have any worries geopolitically with what's happening in the region? I know it's not
Yeah,
your wheelhouse. I know that, looking under the hood of the markets is your wheelhouse, but do you think about that being there? You're in the region.
Yeah, yeah. Well, everybody in the world should be concerned about what's going on in the Middle East region these days. Uh, well, from
Yeah.
the worst perspective, it is terrible things that are happening, as you know. Um,
Yes.
from Turkey point of view, it is also bad because the 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 region is very, very hectic. A
Volatile.
lot of a lot of uh,
What's the talk on the street about it escalating? I heard there's more news about Hezbollah and Israel today. Um, uh, is Iran gonna get involved? Is Iran gonna retaliate, or they're not? And do you think
uh,
it's going to escalate into something worse than the terrible thing it is already?
I think that in the next few weeks, I think we're gonna hear some good news. I am also
You
wishing
think
and hoping to get some
we'll
good
get
news.
a ceasefire and peace
Yeah,
deal?
yeah,
Okay.
exactly.
Will that take
It
gold down?
no, no,
Okay.
no,
Gold is on
because
its way. Yeah, gold's on its, it's like with the weak dollar, gold's going where? Do you have upside targets?
gold has a 2,700 target in my
Okay.
view.
Yeah, I've
You
heard
know,
that number. Yeah.
yeah, you know what? Uh, the gold, uh, the gold's trend has not much to do with what's going on in the Middle East.
Yeah.
If gold were to be influenced by any geopolitical issue, that will be related to the geopolitical issues in the Far East. So, uh, in
Okay.
the
You
Pacific
you liked
Asia.
you thought silver was going to be one of the best buys of the year. You have upside targets there?
I now see 32,
Okay.
but beyond that, I have to check. But I know I think that it's going to go as high as 32 when the gold hits 2,700.
Okay. And then that'll be like the end. That'll be like when the euro's 115 and then they all correct again.
Certainly. Yeah,
Is that
that's
what,
right.
am I reading your mind?
Yeah, exactly. You're
Okay,
reading
cool.
so well.
All right. I tell you what, Okan, I want to thank you for coming in every quarter and sharing your knowledge. You have excellent insights. You develop your own proprietary stuff. Do you want people to follow you?
Yeah,
You
I
want some fans?
absolutely. Yeah, yeah. Why not?
Uh,
Of
uh,
course.
uh, anyone in here ready to be Okan's fan? I think you'd. It's not going to hurt you to follow this guy. It's could give you, keep an open mind. It'll keep your account open, and you could follow Okan on X at his name at Okan Aybar. That's Aybar. Anywhere else, people could reach out to you.
Yeah, they can reach out to me on LinkedIn. And for you to know, in the next months, I will start sharing English newsletters
Oh,
on
yeah, use
LinkedIn.
AI to translate for you.
No, 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 I will write in English.
Okay. All right. So you're going to have a service
Exactly.
in a
A
few months. Okay, cool.
few
All right.
weeks.
Well, all right. Well, my trading warrior brother, Okan Abar, appreciate you coming in and sharing your ideas with us. And I always glean something important from you every time we have a conversation.
Thank you. I appreciate too that.
All right, Okan Abar, everyone. I don't know about you guys. I'm exhausted. And it was only a 4-day week. Felt like I don't know about a 10-day week. And hope everyone has a good weekend. You don't have to do anything today. Don't try and make your week on a Friday. And we'll see what happens next week. Good hunting, and above all, don't forget to be grateful that you could take risk and lose, people can win, and people can't afford to, a lot of people can't afford to be a speculator. So you're in a unique position. Don't just count your pips, count your blessings. Have a great weekend, everyone. See you Monday, and thanks again, Okan.
Thank you. See you. See you later.
All right. See you, everyone. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.